muted response so far in the markets. Yes, the dollar seems to have fallen back now. Is that likely to continue?
Good morning, Alex. There is a sentiment of déjà vu in the market, but I'm not sure it's going to last. If the government shutdown in the US lasts for more than 1 week, people will start to think that, okay, the deadline for the debt ceiling, which is around the 17th of October, is not going to be met. In that case, the risk is a risk of a default. And I think that in that case, we might have a very negative reaction from the equity markets and a positive reaction from the bond markets, which is kind of paradoxical, but we know how it works. US Treasuries always benefit when there is a rise of systemic risk.
I mean, there's quite a lot of issuance in the pipeline as well. Is that going to stop, or what happens to all that issuance in the meantime?
Well, I think until mid-October, so that doesn't leave us a lot of time, there will be no issuance, and it's really what's going to happen next, because it will be impossible for the Treasury to finance anything without issuing new debt. I know that the Secretary of the Treasury said on the 17th of October, I will run out of money. Maybe he has some margins. But, what matters for me is how markets could change their mind. And it's really the length of the shutdown which is going to be the critical variable for the financial markets, I think.
When's the tipping point? When will we know which way we're going to go?
Look, we are Tuesday. Rendezvous next Tuesday. If the prospect is no agreement, in that case, I think equity markets are going to start to slide down.
On to Europe. Some might argue the Italian government's in far worse shape than the US government right now. What do you think?
Yeah, look, what is incredible, back in 2011, we had a 20% fall in the S&P 500. That was caused by US risk of default and a crisis in Italy. So we are going to have the same. But there are some differences. This time, Berlusconi is not prime minister, and apparently there is a split within his own party. But what is the bad scenario? The scenario that could raise the systemic risk in Europe again. It would be a scenario in which the president, Napolitano, has to try to form a new government and does not manage to do this. In that case, Italy would go for snap elections. And I think that would be really the rise of the systemic risk, because who knows? Maybe Italians would say, well, we have tried the euro, and that was not a good solution.
Are the markets losing patience with Italy now, with Italian politicians?
No, I don't think so. I don't think so. It's even more, this feeling of, okay, we have seen the movie, and it's always the same story. But if at some point we go to elections, so that would be the second elections in less than 12 months, with a rise of very populist parties which are against establishment, against the euro, then markets would start paying attention to Italy, not only because of Italy, but because of what it means for the euro compound itself.